This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, June 14th, 2016. Euro dollar. So the euro has recently stalled out at 114.16 with this latest pullback, potentially putting pressure on the recent lows that we saw at 110.98. At this point, we're going to need to see a breakback below 110.98 to really put the pressure on the downside, exposing deeper setbacks towards next key medium-term support at 108.23 further down. Any rallies from here should be very well capped ahead of 114.16, with only a breakback above that level to put the focus on a retest of the 2016 high at 116.17. So right now, 114.16 above and 110.98 below are the key levels to watch. At this point, though, on a shorter term basis, you want to pay attention to yesterday's low, which comes in at 12.32. A break below there could do a good job of accelerating declines back towards 110.98. Sterling dollar. So cable continues to be under pressure, with the market now focused on a potential breakdown back towards next key support around 140. If you look back to that low that we saw back on the 6th of April 2016, below there would guard that level, of course, guards against that more significant yearly and multi-year low at 138.36 further down. At the same time, any rally should be very well capped now by that previous support turn resistance around 143.33. Dollar yen. So dollar yen looks poised to break down below that recent low from May, that multi-month and yearly low from May at 105.55, with a break potentially opening the next major downside extension towards 100 further down. At this point, look for rallies to be very well capped up towards 109, while ultimately only break back above the previous lower top at 111.89 would compromise the bearish structure. Euro Swiss. So Euro Swiss has come back under pressure in recent trade, with the market now focused on a retest of that recent multi-week range low around 108. A break below that level would be significant, as it would force a more significant shift in the structure and putting pressure on the downside, potentially back down towards the 105 area. At the same time, if the market can hold above 108, it could suggest that the market is poised for another bounce back towards recent range highs around the 111.30 to 112 area. Aussie dollar. So Aussie looks to be carving a lower top now ahead of the next major downside extension, but a break back below 71.45 will be required to confirm and expose a retest of the 2016 base at 68.27 further down. If the market breaks higher and pushes back above recent highs around 75.04, this could set the stage for a test of a key 61.8 fib retracement at 75.70, but ultimately right now rallies are expected to be well capped in favor of additional downside. Dollar CAD. So dollar CAD looks to be carving out a significant higher low ahead of that major 2016 low at 24.61 further down. At this point, it will be confirmed if we see a breakback above the recent highs at 31.89, which will open the next major upside extension towards the 135 to 140 area further up. Kiwi dollar. So Kiwi gains have finally stalled out by that 2016 high from the other week at 71.48, and this sets the stage for deeper setbacks in the sessions ahead, back down towards and below recent psychological barriers at 70. Next key support below 70 comes in at 68.93, which is the low going back to the 7th of June. A break below there will really do a good job of strengthening the bearish outlook and putting the pressure back on the downside. SPX 500. So the S&P 500 has stalled out yet again above 2100, with the market stalling ahead of that record high from 2015. Since that record high from 2015, we've seen the market stall out many times above 2100, and that's what we've seen most recently. The pressure now is focused back on the downside following this latest break below 2085, with a key focus on that 2020 area. A break below there would then expose deeper setbacks, potentially all the way back down towards the 2016 base at 1808. At this point, look for rallies to be well capped ahead of 2100, with only a break back above the recent 2016 peak at 2121 to put the pressure back on the top side and suggest a retest of that record high at 2133 from 2015. Gold. So gold continues to be very well supported on dips, as evidenced by this latest setback that we saw the other week down towards 1200. At this point, the latest consolidation that we've seen over the past several weeks is classified as a bullish consolidation, with an eventual break seen above the 2015 peak at 1307, taking us towards 1400 further up. Any setbacks should continue to be very well supported, with only a break back below 1190, some previous resistance, medium-term resistance, now turn support, to compromise the constructive outlook.